Hi, I'm Jim Farish with Sector Exchange. Each week here on Green Faucet, we bring you our sector update. Today we're going to do it a little different. We're going to bring you a video of our update. As you know, last week the markets rallied off of the decline in oil, which was what a lot of people have been looking for. Whether or not that will be a long-term trend in the market, and long-term at this juncture would be if we could get 2 weeks back-to-back for oil to go down, I think we'd be happy. But with oil down around the 125 mark, I think that what we're starting to see is what we've been talking about for the last 2 months, and that is weakness in oil, strength in the dollar, the Fed on guard against inflation. We're seeing Treasury rates pop up. So all of these things are starting to come together that really start to focus on, can we take the next leg up in this short-term uptrend? And as you know, each week, one of the things that we talk about is the long-term trend of the market really has been negative. And it's been negative really since last October. As we've started to move forward, one of the things that we're seeing here is this tremendous upside potential building up under what we think is a improving economic story. We saw first quarter GDP numbers much better than I thought they would be. I'll say that. They came in at 0.9% to the upside. That was better than the original forecast of 0.6%. What I really like here is that if we can get some economic stability, some strength underlying, some strength in the dollar, and we'll start to see oil subside a little bit, maybe back in the $100 to $105 mark, I think you could see the next leg up in the short-term trend. That would be dynamic to the market overall. Right now, we still have 5 of the 10 major sectors in the market to the upside. Those are basic materials, consumer services, technology, telecom. And so what we're seeing is that upside momentum is still picking up somewhat. We had good retail numbers last week, which I think is another positive to the market. So I'm trying to be optimistic. Last week I got a little bit of a backlash in my email basket from the fact that I was negative on the market after the sell-off last week, which all I was really trying to communicate was that you have to be careful when you get these power sell-offs in the market short term. So we're starting to see some turn to the upside. I think that if we can get through the previous highs here, that would be positive. Friday we didn't eclipse that, but we're on our way to that. We did see the S&P capture the 1400 mark again. The NASDAQ is positive. The S&P 600 is still positive. The S&P 400 is still moving up. But one of the key components that I want to talk about is the S&P 600, which is the small cap index. And if you look at this, we eclipsed 383 on the index, which was one of the key resistance points. We held that in this pullback 2 weeks ago. We moved a little bit off of that level this past week. And I think going forward, if we can actually eclipse this 400 mark and start to move higher on the S&P, that's one of the underlying strengths of the market. And if we can get some small cap growth going, I think that overall what we'll start to see is more power to that market as a whole. So the key components as we look forward in this week is look at small cap, look at what's going on in the NASDAQ sector. We've got tech still playing a key role to the upside. Retail RTH, which is the holders for the retail ETF, is starting to move up and break out a little bit. We're seeing some definite movement to the upside. One of the key movements that I wanted to throw out here just as a side is in the healthcare sector. We saw a little bit of a breakout in the healthcare component. And that, I think, has been a laggard here. And if we could get some activity, especially in the biotech component, which is IBB would be the ETF there. PowerShares has a dynamic healthcare ETF. There's some pieces that are starting to move to the upside here that actually could be a developing play within the healthcare sector. And we haven't seen that for about 9 months. And so I kind of like what's going on there as a whole. So to recap a little bit, one of the things I want you to focus on this week in the market is looking at, are we going to hold support levels, which we did do. During our weekly updates on sectorexchange.com, one of the things that we do every week, every day on our Sectors to Glance page is that we're seeing that we held 20-day and 50-day moving averages, which I thought were key. The 20 days was on the more higher momentum sectors such as tech and telecom, both held their 20-day moving averages. The slower moving sectors such as healthcare and those components held their 50-day moving averages. And those are some pieces that were important to me to hold. We did hold them. We've actually moved back up. We saw some positive economic data. We've seen some positive data across the board come out through the balance of last week, and that data is really pushing the market more in an upward momentum. What's lacking is volume. What's lacking is really a true commitment from the investor to commit on a longer term basis here right now. And so those are some key indicators that I want to look at in the coming weeks, which we'll continue to cover on our podcast. But one of the things I want you to focus on is looking at whether or not we break the previous highs this week. If we do, that's a clear indicator of the next leg up. We need to do it with some volume behind it, so we'll be watching that as well. Make sure that you log in every day onto sectorexchange.com. Sectors at a glance, we update every day each of these sector components. Or you can go to greenfaucet.com. On the ETF page, I update every day. I scan the market every morning. We post ETFs that we're looking at every day, so you can see it in both places. That is new. We'll be having more videos such as this that we'll post to the site on a weekly basis, and eventually start doing it more on a daily basis. So make sure you tune in and look at what's going on in those components, and we'll give you more specifics as we go through it. So I've been enjoyed being with you in this format. It's a little bit different for me. Hope that you've gotten some benefit from it. Again, my name is Jim Farish. I'm on sectorexchange.com and greenfaucet.com ETF.